Good evening to all attendees. Warm welcome from Thai Union for the Opportunity Day session for the first quarter of 2022. Today, there are Thai Union management who will present the information as follows. First, Mr. Ludovic Ganier, Group CFO.
Hi, good afternoon, everyone. Very happy to be with you today.
And Ms. Nelly Goldman, Investor Relations.
Hi, good afternoon.
For the sequence, we will start from the key highlights, followed by first quarter financial results, and we will end with 2022 outlook for around 30 minutes, and the rest will be Q&A session. Please note that the session will be conducted in English. Now, may I pass the stage to Ludo to begin the presentation.
Thanks a lot. Good night, and again, very happy to be with you today to go through this ACT Opportunity Day. We jump straight, you can move on the slide. We jump straight to the first chart. So we wanted to go through a presentation of the company as usual. So here, first of all, the key highlight for Q1. I think we have been quite happy with the Q1 numbers. We have been delivering a record high top line for Q1. The growth compared to previous years is at 16.5%, 16.5, so very high. It's a combination of different things, and we'll elaborate further. But our three categories have been growing in volume, pricing, of course, and FX. These are the three components explaining the very high top line. Gross profit margin, we have a bit of dilution. I think we are at 17.5 versus 17.7% last year. So a bit of dilution here. It's not that huge, but clearly we are facing some inflation, and I will elaborate further on this one. The OP stands at 1.667. Declining versus last year by almost 11%. So this is quite large. The key explanation is we are facing still the very high inflation of our freight cost. And again, I will elaborate further. The good news is on the net profit level. Net profit amounts to 1.746 for Q1, declining by 3% compared to last year. Below the OP, we have some challenges in the share of profit lines, but which are partially offset by the other income, and also we have some good news on the tax impact. So all of this, at the end of the day, lead to a 1.7 billion baht. We are declining a bit compared to last year. However, keep in mind that the year 2021 was record high for us the whole year, and especially H1 was very strong. So the fact that we are not too far away in Q1, we believe it's a good news. So here, next one, just a quick focus on the inflation we are focusing. And we're not the only one in this situation. All the food industries and companies are facing with these kind of challenges right now. There are different areas of inflation for us. The one on the left, we knew already since Q4 last year. So we have been facing, since 2021, an inflation of our freight costs. Okay, and of course, we are an export company. We do export a lot to the US, to Europe. The lead time and the cost has been really increasing a lot. And you can see here some tables showing where we stand right now. The cost of a container has been multiplied by 6, for instance, compared to where we were before. We do see a bit of normalization happening in April. So we need to see May and June if we have further normalization. That would be an excellent news for us, because for us it was one of the key challenges. And we did share here the impact of the price impact on the freight cost. You can see for Q1 alone, it's 710 million baht for Q1, and it was already 200 million baht in Q2, meaning in 2 years, the price impact of the freight cost is 900 million baht. 900 million baht for us, of course, it's a huge impact in our profitability, and I'm quite happy with that. Overall, our profitability remains very high. Another challenge is on the packaging and ingredients. We are using a lot of aluminium, we are using a lot of steels, and the ingredients we are using a lot of sunflower oil, and you know that all these topics have been facing also with a lot of inflation. This was new already since Q4 last year, so we were already anticipating some very strong inflation. There is one thing which was new in Q1, which is the inflation we have been facing on the raw materials and the utilities. I will elaborate further, but of course, the war between Russia and Ukraine, the increase of the fuel price, that was not something we did expect in our budget. Of course, we have some solutions. You can see here on the right, the first thing is we're not exposed 100% of all of this. We have some hedging, not on everything, but on some topics, like some packaging. We have a bit of hedging here, so we're not fully exposed to the inflation. The second one is at the end of Q4 last year, we were anticipating some inflation to happen. So we have decided to increase our inventories. Our inventories at the end of Q4 were at record high. Okay, that was done on purpose to try to offset, to mitigate part of the inflation impact. Of course, the price negotiation with our customers is something which is key. It's always key for us, you know that, but especially this year, given the specific context of inflation everywhere, that was very important. The promotion intensity also will be something which will be very important. If our price increase is not enough to absorb the inflation of our costs, then we can still play for our branded business with the promotion intensity. What does it mean? It means that we can decide to increase or decrease a bit the level of promotion. Of course, it will have some negative impact on our volume, but then it will have some positive impact on our gross profit margin. The product mix is also something we are working around. Especially you've seen that there was some hyperinflation, like for the sunflower oil. So here we get back to our customers and we are proposing to change the spec and moving from some very expensive ingredients to something which is a bit less expensive. And finally, the management of our costs in our factories is, as usual, something which is really key for us. Okay, we need to be super efficient on this part. You know that we have been pushing for more automation over the last few years, and we continue down this road. So here again, a lot of challenges. I think the level of inflation we are facing in Q1 are clearly unprecedented. Some of them we knew them since Q4. Some of them, like the raw materials and the utilities, are kind of new in Q1. However, we have a mix and a bunch of solutions to cope with this the situation. So here, just a quick focus on the key raw material prices. And you can see here all of them, the key exposure for us, the tuna, the salmon, the shrimps have been increasing in Q1. You can see the tuna price, which has been very stable over the last few years. In Q1, the average fish price was around 1,717. And then in March, it was exceeding the 1,800. The good news is in April, we can see some sign of normalization with the fish price. You can see here on the bottom right at 1,800 USD per ton. Different situation here for the salmon business. Salmon business is rocket high in Q1, 78 NOK average for Q1. This is very unusual for us. This is all-time high, and you can see the bad news is it continues to happen also in April with some further increase of the salmon price in April. The shrimp price was also quite high. It has been very stable since 2019. You can see that from the graph. But in Q1 22, we've been facing some inflation. The good news is it is normalizing in May. Apart from this, we have some positive news on the FX. And you know that we are an export companies, so we are benefiting when the FX when the Thai baht is depreciating versus USD. And this is what is happening in Q1. You can see the average rate was at 33.1. Last year in Q1 it was 30.3. So here it's a very positive impact for us. The exposure USD to Thai baht is the key exposure. Similar situation also for the versus GBP and Euro versus Q1 last year. We are improving a bit, but we are declining a bit versus Q4 21. And this is something we continue to follow. But right now the trend and the weak Thai baht versus the USD is something which is good for our business. So in terms of operation, there is one excellent news in Q1. We are almost running normally our operations. If you do follow us, I'm sure you've seen that in Q4 and in Q3 last year, we have been facing some challenges due to COVID-19. We continue to be very careful. The priority is still to protect the health of our people. But the good news is we have not been almost no impact at all from COVID-19 in Q1. So here, the fact that our factories and our supply chain is up and running at normal capacity is an excellent news for us. Of course, we do remain committed. We have been supporting the local communities. We have been doing a lot of CSR activities over the last 2 years. You know, overall, I think the last 2 years in terms of business has been positive for Thai Union. So we do believe we need to give back some of it to the local communities and also the CSR activity. So here we did provide 2 examples of what we have been doing. We did donate some recycled PET bottles, and we did donate also some cans of our Ambient product here and some rice also to various organizations here in Thailand. One news, which was not part of our Q1 communication because it happens after. In fact, it happens last week. We did announce a new investment in a company called Mara. What is Mara? It's a Canadian company. They are mostly working on the algae-based oil, okay, which is a growing sector for the time being. We did invest 10 million Canadian dollars. It's not a huge investment. It's a small investment. It's a minority shareholding, but we'll get a board seat for this investment. We are very happy with this one. We have been working with this company since a bit of time right now, and they become very important for our ingredient business. And the goal here is to be able to deliver some synergies around sales, around R&D, and also in terms of operations. Just to give you an example, you know that we have been reopening one of our refinery in Germany, and they will be able to refine some crude oil, algae crude oil in this factory, which is an excellent news for us. And the idea is to move from being a pure tuna oil player to being a full omega-3 player. I think our positioning is very interesting. You have on the right our path to the ingredient business over the past few years. We now have the refinery in Germany. We now have 3 crude oil extraction plants in Thailand, in Ghana, and in Seychelles. We still have the powder facility in Thailand, and we are building right now the protein hydrolysate and the collagen peptide. I don't mention also the investment we've been doing since last year in Clover. You are already aware of that. So Zivita, this is our supplement business. We have been launching last year in Q4. It is still very, very small. I want to manage the expectation that we have some good news. So far, we are on track with our plan. We did reach a market share of number 2 here on the collagen in the super and hyper chain. So this is positive. It is small, but we have very high expectation behind this business. We want this business to be at 1 billion baht in sales in 2025. Okay, and of course, we have a ramp-up curve. Last year, we started only in Q4. It's supposed to grow this year and to grow further also next year. So far, positive news coming from this one. Just a quick update also on the food tech area. And you know that we are part of one incubator and one accelerator program in Thailand. We are part of SpaceF. The name of the program is called SpaceF. And in this one, we are partnering together with the NIA, the Mahidol University, and also Thailand and Deloitte. And here we are very pleased that we have the third wave of our startups, something like a bit less than 20 startups. The very good news also is half of them are coming from the overseas. It's a very good news. The past 2 years, of course, there were much less startups coming from overseas because of the COVID. I think it's a very good sign that our program is being well known now among the startup communities, and we want to continue to engage in this one. On the bottom side, you can see our CVC, our corporate ventures activities. There is no new investment to be announced in Q1. We are working on different targets, maybe to happen in Q2 or in Q3. But there are some good news still. Flying Spark, which is our first investment we have been doing in the CVC, is right now building a new factory in Thailand. If you remember Flying Spark, they are working on the insect-based area. And the same for Orgafil, which is one of the other CVC investments we have been doing recently. Both of them are building some factories in Thailand. We are very happy. It's a very good development. We do believe there will be some synergies with our pet care business. Of course, it starts small. I want to manage the expectation. You cannot expect huge impact coming from this one, but it's a very good sign. And I think we are on a very, very good track on that. So here, our usual story in terms of top line and GP margin since 2018. And I'm very proud about this picture. And I think it's a very good reflection of the performance of Thai over the last few quarters. You can see the last 8-9 quarters have been extremely positive. We have been facing a lot of challenges back in 2018 in terms of gross profit margin. You could see we did deliver a horrible 12%, 11.6% in Q1 18, and then 14, 15%. And then we did manage to increase to 16+% in 2019. And now since Q2 2020, we are enjoying a gross profit margin level, which is always in the range of 18%. In Q1 2022, we are a bit lower at 17.5. And you can see, I think the last 8 quarters in a row, we have been delivering also some top line growth. 16.5, you can see, this is extraordinary for us. The good news is this is happening after Q4 21, which was also very strong. in terms of top line. Bottom line, we are impacted by the inflation. Okay, we have some challenges in our business. Inflation is there. Red Lobster is not performing in the right way. So net profit, we have a small dilution. But again, given the fact that 21 was so high, we are quite happy to be close to this. So moving to Red Lobster, and if you do remember, Q1 usually in terms of seasonality, it's always a profit-making quarter for Red Lobster. Different situation here in Q1 22. They have been facing with various challenges. The first one was Omicron variant happening in December, January, and February. The impact from this one is a decrease of the guest count. The customers being afraid again of going to the restaurants. We are not the only one impacted, but clearly the guest count was much lower compared to our expectation. Plus, we have been facing also the situation of inflation. And the inflation has been really dynamic for the key product that Red Lobster is selling, meaning lobster, meaning shrimps, meaning snow crab. All these products have been really impacted by the inflation in Q1 22. The last one is we are still facing the situation of labor shortage. Okay, the level of unemployment in Thailand, in the US, is very low. It's difficult to find some new workers, some new staff. We want to hire more people there, but it's a very difficult situation, not only for us, but I mean for everyone. So you can see in Q1 22, the share of loss from the operations amount to minus 243. Okay, we are not happy with this performance. We want them to get back to a much more normal situation much quicker. If we move to the next one, we did update a bit our full year forecast for Red Lobster. You can see initially we did communicate in Q4 a share of loss from Red Lobster around 350 million baht. You can see that the update one is minus 650 million baht, so it's increasing compared to last year. Last year in 21, we are very happy. The turnaround compared to 2020, where we delivered minus 1.2, was huge. In 21, we are very close to minus 200. Keep in mind that in 21 also, we did benefit from some incentive from the US administration, this one. So the real number should be around minus 300. But definitely there will be some deterioration in the line operation. There is one good news, which is on the lease accounting adjustment, if you remember. Last year, we did record it for the first time, this lease accounting adjustment coming from some differences between the US GAAP and the Thai GAAP. The amount will be much smaller this year. So it kind of offsets the impact coming from the operation. So bottom line, we should be at minus 1.0, minus 1.1 in terms of share of loss total, combining the two compared to minus 800 last year. Of course, I'm sure you have heard that the CEO of Red Lobster has been leaving by mid-April. You could see from the numbers that the performance was not good. And I think there was a misalignment between the CEO and also the Red Lobster board on this one. And this is why she decided to leave. However, we do believe we have a good leadership team within Red Lobster. We trust them they will be able to face with this challenging situation. Clearly, right now, Red Lobster is our key concern at group level. You can imagine, of course, the cash situation is difficult. So this is one of our key watch out, and we follow very carefully the situation there. I will move quickly on this one because this is already a bit old. These are our Q1 numbers, but you can see here, I mentioned this one, 1746, 4.8% net profit margin. Bottom line, we are quite happy with that one. If you move to the next one, the adjusted one, there was one significant one-off to be reported in Q1. We did settle with the MMO. What is the MMO? This is the UK duties. And we had a very old litigation with them. And in fact, they have been the one attacking us back in 2013-14. And they were claiming that we were using some MMO fish, some IUU fish, on this one. And we went to the court. We won the cases back in 2019, and then we attacked them back on this one. So finally, we agreed on a settlement. They did pay an amount of 77 million baht, which was recorded in the line of other income in Q1. It's just a compensation for the costs we have been having on this litigation. We have been destroying some products, and we have been also incurring some legal costs. So it does not cover the whole costs we have been incurring. However, it's a small portion of this one, and it's a positive one-off to be reported to you in our Q1 numbers. If you exclude this number, then our net profit is closer from 1668. Net debt has been increasing in Q1. I think no surprise on this one. We also have some increase. We usually have some increase of our net debt in Q1. Why? Because we are building up our inventories. So the EBITDA is quite good in Q1. The capex are under control. We did not perform any very large investment in Q1, but you can see there is one big box, which is 5.7 negative impact or increase of our net debt coming from the net working capital. There are two key components for this one. The first of all is the AR, our record high at the end of Q1, and you can understand with our sales being so high, our level of AR are also very strong. It's a good news. It will transform to cash in the next 1 or 2 months. And the other part is we have some further increase of our inventories. Part of this one is fully under control because we want to push and we are building up our inventories in order to prepare Q2 and Q3. But part of this one, we have some opcos where the level of inventories is a bit too high. But overall, we end the quarter with a gearing ratio net debt to equity exceeding 1. And I think it's really reasonable on this one. But we want to work on this one. We want in Q2, in Q3, in Q4 to improve overall the picture. And we do expect that in Q3 and Q4, we will manage to decrease the amount of net debt. I can be quick on this one. You can see the level of net working capital is record high. I just explained this one. And now I will hand over to Lina for the view by business category. Thank you.
Thank you, Ludo. So here you can see our 3 core businesses, the ambient seafood, frozen and chilled, and pet care and value added. In terms of sales contribution for the first quarter, the ambient seafood was at 43% of sales. Frozen and chilled was at 38%, and pet care and value added was at 19%, which was slightly increasing from 18% in the first quarter of last year. In terms of the mix between the private label and branded, the contribution from the OEM business increased from 59% last year to 61% this year. This is mainly from the higher sales in the pet care and also the frozen and chilled seafood businesses. For the ambient seafood, the mix, it remained majority branded at 52% of the ambient seafood sales. And of course, we have the 3 new value enhancing businesses, which you can see at the bottom. Ludo mentioned some of these already. So we have the ingredients business, supplements, and also alternative protein. And for these, new innovative businesses, we have a target to achieve 10% of revenue coming from innovation with a gross profit margin of above 20% within 2025. Next is on the, you can see our strong growth, in our core businesses, especially the first one is the frozen and chilled seafood business. This grew 26% from the first quarter of 2020 from the strong turnaround of the business from a low base in 2020 since the restaurants were impacted. The restaurants had temporary closures due to the impacts of COVID-19. The second one is the pet care and value added business category, which was a significant growth of 54% from the first quarter of 2020, as people have been adopting more pets and willing to spend more on them. For the ambient seafood sales, this one was normalizing at 1% or less than 1% from a high base in the first quarter of 2020, as we saw sales push during that time from the pantry loading amid the first wave of COVID-19. You can see on the right-hand side, the sales for the total group has been growing at almost 17% from the first quarter of 2020, thanks to our strong core businesses and diversification. And our margin has been maintained at a high level of 17.5%. Just deep diving into our ambient seafood business. So our sales have been growing at 14% year on year, driven mainly by our higher tuna sales, especially in the US, Europe, and Asia. And the sales growth was also supported by the higher selling prices and also favorable FX, as Ludo mentioned earlier. This was also on the back of a volume growth of 7% year on year, thanks to higher demand of our products, both in Asia, where we are doing mostly OEM, and also in our European branded business. So you can see here that it's both a price effect and also a volume effect. For the margin, it increased to 22% in the first quarter of this year versus 20% last year, thanks to our improving businesses such as tuna, sardine, and mackerel, and increased volume and also higher selling prices. And also our strategies, for cost-efficient management as well as product mix. Here, just quickly on our ambient business strategy. So you can see our sales and margin trend has been growing. For the sales, it has been growing at 3% CAGR since 2019, and with a margin expansion at 21 to 22% level, thanks to our cost reduction, improving businesses, and also our focus on more value-added products for the tuna cat segment, which you can see on the left-hand side here. We have been focusing on, we have been since last year starting our healthy living product portfolio, especially for our business in Europe, where we have been, launching some naturally enriched tuna with omega-3, vitamin C, calcium, and also other essential nutrients. So these are some examples of healthy products in Europe. In Thailand, we have also been, just recently in the first quarter of this year, we launched a new product with yellowfin tuna in olive oil under our Select brand. This one is, it's a healthy product. It's positioned to be a bit more premium, a bit, higher margin. So this one is available at 7-Elevens and also at supermarkets nationwide in Thailand. And of course, we have with the raw material price fluctuations. I won't go through these strategies as Ludo has already mentioned them, but you can see here some of the ways that we have been managing the fluctuations quite well. Next is on the frozen and chilled seafood business. The growth was strong at 14% year on year, mainly from our continued recovery of frozen, the food service businesses, as well as the higher selling prices and also FX. For the gross profit, this one has been improving by 1% year on year, mostly in the shrimp segment, thanks to the strong demand in Asia and also higher exports. However, it's partially offset by lower profitability in the US and Europe, as we have been impacted from higher logistics costs and also raw material prices, especially, for example, lobster and salmon. So you can see here the gross profit has been normalizing to 9% level versus 10% last year. However, if you look at our track record, it's quite in line with the margin level at around 9 to 10%. Here, just quickly on the strategy to improve our profitability of the frozen business. We have the gross profit has been growing at 1.3 billion baht in the first quarter of this year, which is higher than COVID and also pre-COVID level. We have been seeing strong sales growth from the food service business recovery in the US, Asia, and Thailand. We are launching some NPDs with new value-added products. You can see some examples in the photos on the left-hand side. Our brands in Thailand, like Q Fresh and Thamachat Seafood, this also continues to be one of our focuses. And the culinary plant project, this one is still ongoing. And it's on track to fully commercialize within next year. And here we are consolidating 3 of our existing factories who are producing some ready-to-eat, bakery, dim sum, and other products. And we are increasing our capacity by 38% with some more automation. So we have been focusing more on automation to improve the production efficiency and lowering the cost per unit. So for the pet care and value-added business, we have been delivering a significant sales growth of 27% year-on-year, on the back of volume growth of 8% year-on-year. This is thanks to the continued strong demand of pet care products, launching our new innovative products, portfolio expansion, and also higher sales in the packaging business, also as well as FX. For our gross margin, it remained robust at 24% in the first quarter of this year. This one it slightly declined from 27% last year. However, last year was quite an exceptional performance with the favorable raw material environment and also the higher sales in the pet care, US pet care trading business. However, if you look at our track record, it's also in line with, the margin level of around 22 to 24%. Here, just quickly on the strategy for the pet care business, we have been, seeing double-digit growth over the past, several quarters. This is thanks to the growing demand of pet food, as people have been adopting more pets and treating, the concept of humanization, so treating them like a family member, and they're willing to spend more for the health and the longevity of their pets. We have a global pet care innovation center where we work closely with customers to co-develop products and to launch new innovative products. And our expansion strategy for pet care, we want to expand expand further into the US, Europe, and also penetrate the Chinese market. And we are focusing on, being an OEM producer for wet-based cat food from tuna and chicken. And of course, we are focusing on our pet care and our packaging and value-added business as well. Here for the guidance, we have revised our guidance slightly for the sales. We revised it to 7 to 8% growth year on year, revised up from 4 to 5%. This is from our strong core businesses, as well as higher demand and selling prices, as well as favorable FX. For the gross profit margin, we have revised it down from 18 to 18.5 down to 17.5 to 18. This is, due to the higher cost that we have been facing, especially raw material prices, packaging, and edible oils. However, it remains at quite a high level. SG&A to sales also revised down, or we have lowered the range slightly. This is also an inflation topic, especially the freight costs. We have been seeing some improvement in April, as Ludo mentioned. But yeah, we have to continue to see the situation over the next few months. But we have maintained our sales ratio, SG&A to sales ratio at 12 to 12.5%. For CapEx, 6 billion baht, this is the highest ever. We're investing in culinary project, as mentioned, the protein hydrolysate and collagen peptide plant, and also our new cold storage in Ghana for our ambient business. And finally, our dividend payout ratio remains at 50%, at least 50%. I think that's it for the presentation. Maybe we can begin the Q&A.
Sure. Let's move on.
Okay, here we have a few questions coming in already. So the first one, what is the most concern for the rest of the years to deliver a good performance for Thai Union?
I think you understood. I think we have two key challenges. The first one is inflation. I think we had one specific slide on this one, and we did show you the inflation. The freight cost was really very important. The packaging, the ingredients, the raw materials, and also the utilities. Basically, all the costs are just increasing. Okay, so this is one of the key challenges. We need to see over the next quarters how does it flow. We do expect some slight improvement on the raw materials to come. Of course, the war between Ukraine and Russia, we may have also some impact on this one, and we do expect to have some normalization, at least on the freight cost in H2. So this is our assumption that it will improve in H2. So this is the first one. The second one will be maybe the impact of the demand after our price increase. Of course, we had to increase a lot of prices. In Q1, we need to see the impact on our volumes. So far in Q1, the volumes were really strong. We may have a bit of effect of retailers willing to stock up before the price increase happening in Q2. So the impact on the volume will be something to watch out, but we are quite confident for the rest of the year. And then I told you the key concern right now in terms of business was Red Lobster. You have seen the performance last year has been really improving compared to 2020. However, in Q1, we are not happy with the performance at Red Lobster. Usually this is a quarter where they deliver a strong profit, and here it was a heavy loss. So here clearly this is a key watch out for us in terms of business.
Okay, for the next question, it's in Thai, but please allow me to translate it for you. So the Thai baht depreciation against key currencies, is this a benefit for our business?
Very clearly, it's a yes. We are exporting a lot of things, so we are buying in dollars the fish, but our conversion costs are mostly dominated in Thai baht in Thailand, and then we are exporting and we are selling in USD, in euro, and in GBP. So here, as soon as you have some depreciation of the Thai baht versus USD, this is really our key exposure. Then it's positive for our business. Okay, and you can see here the change. We have been moving from a situation where we were facing with a strong Thai baht situation a few years ago. We were between 31, 30 Thai baht for $1. Now we are between 33 in the also even 34 Thai baht from $1. So this is positive for our business, and of course, our factories gain in competitiveness compared to our competitors in the Southeast Asia. So we are quite pleased with the effects, and we do expect this situation to last also for a few more quarters. Of course, you have seen the US, they have been increasing their interest rates, so there may be some impact in the USD, but we don't expect some big change in the near months.
Okay, for the next question, in terms of our sales target for this year, have we adjusted it? Have we revised it from the previous one that we gave, which was 5% growth year on year, and for what reason?
That's correct. Maybe you can get back to the one slide on the guidance. The initial guidance we did provide to you in Q4, we were targeting a top line growth between 4 to 5%. We have been revising up this guidance to 7 to 8% for the full year. Different explanation for this one. First of all, the inflation is higher compared to expectation. We told you that already. So we have to increase our prices higher compared to our initial expectation. So you have a price impact in this one. Second point is the volume, the demand is also stronger compared to our initial expectation. You could see that in Q1. We were not expecting the three categories to grow at the same time. So the demand is very strong. The last thing is the USD is stronger compared to our initial expectation. We told you in our budget assumption that the assumption was around 32 Thai baht for $1. Now we are between 33 to 34. So we are also benefiting from a positive effect. So there are the three key components that we have explaining this top line guidance being upgraded a bit. Okay.
The next question is, how does the reopening of the countries impact Thai Union and why?
So you're right. Overall, we can see some relaxing of the measures everywhere in Europe. It is very strong. I've been to Europe, I think 1 month ago, and they don't wear any mask in the streets, and everything is reopened. That's really good to live in such conditions. We can see also in Asia, the measures are relaxing, specifically in Thailand. We can see also some improvement of the overall situation. There is one exception, which is China, which is for the time being still applying a very hard policy on the COVID-19. Let's see over the next months the development of this one. Overall, when the measures are relaxing, this is good for our business. The food service, the restaurants are reopening. The people are more willing to go out for dinner. So this is good for our frozen business. We may have some slight negative impact for our ambient business because you have seen during the COVID, during the quarantine, during this work from home period, our ambient sales have been extremely strong. But you have seen, I think, the last 2 years clearly show that we have the right portfolio. Okay, some year the ambient sales, the ambient category would be the one growing. The year after, 2021, it was the frozen year, which was really growing. And you can see also the pet care, value-added and others has been extremely growing over the last few years. So yes, there could be some impact, mostly positive, I would say, when the measures are relaxing, but we do remain quite confident in our business.
Okay. Are we able to pass on the rising costs to our customers? for example, logistics, packaging, ingredients, and raw materials. How much can we pass on? Around 50 to 60%?
So here, of course, it's one of the key questions that we have. We are facing a lot of inflation. I think you could see from our Q1 performance that it is quite good. Okay, our gross profit margin remained almost stable versus last year, and last year was exceptionally high. So yes, we did try to pass the tariff to our customers. Initially, just to give you an idea, they were requesting at the beginning some price decrease when we started the discussion in Q4. Okay. However, I think we pushed back, and we have seen also that all the food industries, they were requesting some very significant price increase. Usually, to give you an idea, we get only 1 to 2% net price increase. Here, overall, for our branded business, we got some price increase depending on the country between 3 to 7%. So the price increase we got from our customers were much higher compared to usual. We do believe that it is sufficient to absorb the logistic cost, the freight cost inflation, the packaging, the ingredients. However, it will not be sufficient to absorb the raw material and the utilities inflation. So very likely, we'll have to get back to the customers to negotiate some new price increase. Okay, it's very unusual for our branded business. It's very usual for OEM business, but yet we do believe that we'll have to do that. Keep in mind that if by any chance at the end of the day the price increase are not enough to absorb the cost inflation, we can always play with our promotional intensity. Okay, keep in mind, this is very important. We can decide to decrease the intensity of our promotions. Of course, negative impact on our volume, top line, but we want to preserve our gross profit margin. So clearly, the gross profit margin is expected to be under pressure. In 22, this is why we have been revising down a bit our assumption, but overall, I think we have been quite happy in this one. And I can see also that we have another question on Red Lobster. Maybe you want to?
Yeah. So Red Lobster has been a challenge since the beginning with the upcoming, summer in the U.S. and the reopening of the situation. Can we expect the Red Lobster business to improve? And are we affected by the staffing challenges in those restaurants?
So yes, very clearly, I told you, this is the key point of concern that we have right now in 22. We have been impacted again in Q1 by the Omicron, by the inflation, and by the labor shortage. So yes, to answer very directly to the question, we have been impacted by the labor shortage. What does it mean? It means that when you want to reopen your restaurants, you want to hire more workers, more staff, and more managers also. We are missing these kind of people, so we cannot reopen the restaurants for all the lead time we would like to open. Okay, so sometimes on some restaurants, we need to open with some restricting opening hours. And of course, this is penalizing for our business. We are not the only one facing with this situation in the US. I think the whole restaurant industry has been really facing with very heavy challenges in Q1. You can see for the full year, our full year forecast, we have been deteriorating our full year forecast for Red Lobster, 650 million baht, to be compared to the minus 300 after restatement of the US incentive last year. So the situation in 22 will remain challenging, but we are fully committed to turn around the picture.
Okay, a question on FX. Can we expect some FX gains in the upcoming quarter because of the favorable FX rates?
I think it will really rely on the change in the FX. Right now, the change in April was still quite favorable for us. If it follows this trend, yes, we should expect some more FX. If it goes the opposite way, then we won't have any FX gain. It could be even some FX loss.
Okay, and a question on the progress of the iTail spin-off. What's the progress? Do we still plan to list it in the third quarter of this year? And are there any changes given the market volatility?
So indeed, we are still on track. We did communicate that we were analyzing if we could go for IPO for iTail business Q3, maybe Q4 on this one. Of course, it will depend on the market conditions. You've seen that the market conditions are changing right now, so we don't know what will be the market conditions in Q3. There is a lot of volatility on the market right now, so we will analyze. So depending on the market conditions and also subject to the SEC approval, we decide to go or not for this project.
Okay. A question on the Q2 performance, how do we expect the Q2 performance to be compared to last year?
I think if you get back to last year, the Q2 performance was really exceptional especially in terms of bottom line. The gross profit margin was super high. The OP also and the net income was also extremely high. We don't expect to be at this level, and I think we did communicate that in our guidance for the year 22. H1 last year was super strong. We were expecting H1 in 22 to be a bit lower, and then some improvement to happen in H2. So we do expect some kind of normalization compared to the performance we have been delivering last year in Q2. Yet we do expect some strong performance.
Okay. Can you give us a quick update on the SEC case? Is this has this been resolved and is it cleared?
Sure. So I'm sure you have seen that there were some SEC sanctions received. I think it was in March for two of our board directors. These board directors did resign. Then we did a specific, and one of them was replaced, and we are looking for a new one. And especially Qo2 Performance become the chairman of the board, replacing his father. I don't know if you have seen that in our Q1 communication, we did one specific focus. Right now, I don't have a lot of time to elaborate, but we did one focus where we did explain what we have been doing in terms of corporate governance. And I think we have been doing a lot. I think our track record, except for this one, is very good. For this one, we want to get back to a good track record again and want to continue with this habit of transparency and confidence from the investors. So yes, we do believe this case is behind us now.
Okay, thank you, Ludo. We do have a few more questions, but since we have reached the hour, I think please feel free to contact us, the investor relations team, after this event. So yeah, please allow me to send it back to Kun Ice to end the session.
Due to the time limitation, please allow me to end the session. Thank you so much for your joining us today. We hope to see you again for the next part. Goodbye and have a good evening. Thank you.
Thanks a lot. Stay safe, everyone. Bye-bye.
Thank you. Bye-bye.
Bye-bye.